Hey there, I had a situation recently with a client that I wanted to tell you about. I'm sure you know that when there's a loan involved in the purchase of a home, the lender makes the buyer have an appraisal done, so the buyer pays for it, but the lender is their client, and the appraiser goes out, gives their assessment of the value of the home. They report that back to the lender, and that value has to either match or be better than the purchase price of the home. And this is to protect the lender's interests. So every now and then we have a situation where an appraisal comes in lower than the purchase price that's on the contract. And in the case that I'm talking about, it was a VA loan. So when there's a VA loan involved, this does what's called invoking tidewater. And I'm not going to get into why it's called that. But so in this case, my clients were under contract to purchase a home for, I want to say, $370,000. The appraiser had a really hard time finding comps for the home because it was a log cabin. It was really old. It was in a mixed use area, so they couldn't find any comps. So it ended up that the appraisal came in for $350,000, so $20,000 under what we were under contract to purchase it for. So in this case, you generally have three different potential remedies. One is the buyer can just back out. They can say, the appraisal is lower than the contract price, so we can't do this, and the deal is over. They will get their earnest money back as long as they do this within their due diligence period. They won't get their due diligence fee back, but if they can't make the deal work, then that's what they have to do. The second option is that they can pay the difference. So if the buyer has $20,000 cash, they can just pay the difference, and then the lender considers their interest to be protected, and they move on. The third option is that you can go back to the seller and negotiate a lower price, and that's what we did in this case. And honestly, $20,000, that's kind of a lot, but it's in the seller's best interest in these cases to work with you as the buyer, because think about it. If they said, no, we're not going to lower the price, you need to deal with it, and the buyer backs out, then the seller's got to put that home back on the market. They have to go through the process of telling people why the sale failed. They potentially have to lower the price anyway, because any other appraiser is going to have the same hard time finding comps. So it's really in their best interest to work with the buyers. And I always tell my buyers this, like, just hang tight. Let's work together with the sellers and the seller's agent and try to work this out. And so again, that's what we did in this case. The price ended up being lowered to $350,000. The lender was happy. My buyers were obviously happy. The seller was happy because the deal got done, and that's how it worked out. So those are ways you can handle what people often call a low appraisal. We have to be really careful using that term, because appraisers are qualified, certified, licensed to do their job. They are the only ones who can technically provide a value of a property. Realtors, real estate agents, we cannot. We can offer a suggested list price or a suggested offer amount, but we can't provide a value. So anyway, lots of options if you get a low appraisal. Well, a handful of options. And it's super important that you have an agent who's dealt with this kind of thing before and knows the ins and outs of negotiating the deal to get it closed. And that's what we did. So enjoy the rest of your afternoon.